If I could go back 6 years ago and tell myself 5 important things about trading before I started, these tips are what I would say. I would have saved myself probably years from not wasting my time focusing on the wrong approach, not to mention thousands of dollars because I would have known exactly what to focus on from the get-go. And trust me, if you are a new trader, you need to hear these because you are most likely going to fall into the same traps, scams, and pitfalls that I did when I started this career. So with that being said, these are the top 5 tips that I wish I knew before I got into day trading. Let's kick it off with something simple, but something that I immediately fell into. Tip number 1 is following alerts will not make you profitable. Now, this is most likely how most of us got into trading, especially if you got into trading within the last few years. You're bombarded by social media posts and ads of people who promise that they are millionaire traders, and all you have to do is sign up for their program and simply follow their buy and sell alerts, and you too will become a millionaire. Well, there's a ton of things wrong with this approach. First, you learn absolutely nothing about how to trade if you just follow alerts. It would be like going into an operating room and telling the surgeon that you'll learn how to perform a surgery just by following his steps. You'll have zero background knowledge whatsoever in case something goes wrong or you need to do the surgery yourself. Secondly, most of the time, following alerts is simply a front-running scam. No matter what, you'll be buying after the alert is sent and the guru is already in, so you get a worse price than him, and then you'll be selling after the guru is already out, once again, getting a worse price. What may be a 15-cent per share trade for the guru is now only a 10-cent per share trade for you, and that's if it doesn't just dump completely on you after the thousands of other traders who are following the same alert get out before you do. I experienced this firsthand when I first started trading in one of the most popular trading chat rooms back in 2016. As soon as the main dude would send an alert, by the time I pulled up the ticker symbol, it was already a huge influx of buying volume and the stock already spiked up over 10%. And seconds later, the leader would send his sell alert and have an awesome trade just for the stock to dump right back down. It's a classic pump and dump scheme that you're literally paying to be a part of. Lastly, what happens when the person who is sending the alert stops trading? You're back to square one with no knowledge at all, and you know the common saying, give a man a fish and he eats for a day, teach a man a fish and he can eat for a lifetime. Now, tip number 2 is forming bad habits in the beginning is extremely costly. This next point is one that is extremely important and arguably one of the main reasons why most beginner traders never make it to that next step of being a break-even trader or even a profitable trader. When you try to learn trading on your own, you get bombarded with just so much garbage advice from people who shouldn't be giving advice in the first place. There are so many different strategies, so many perspectives to the market, and if you just try to soak it all up and apply it yourself, you're just gonna have a jumbled mess of trash that you can't effectively trade with. And since one of the main things that separates losing traders from winning traders is the mindset towards trading, these early trading habits that you develop from just trying it alone, like over trading, revenge trading, sizing up too much too soon, chasing breakouts, and so on, become that much harder to unlearn after those neural pathways have been solidified in your brain after some time. The more that you lose as a trader in the beginning, the more scared you are of taking further losses. It's a natural defense mechanism in the mind. But this exact defense mechanism actually causes you to lose even more, because then you start searching for some holy grail trading strategy that guarantees success every time. You start to look for confirmation, and even when you do have a green trade, you take the profits off way too fast because you're afraid of it falling against you. So while you might get a small step forward, when you eventually do have that loss that you stumble across, you freeze and panic, and maybe you hold on too soon and hold and hope that you'll be right, and then bang, you take 5 steps back with a big loss, and then the cycle repeats. It's extremely hard to break out of these bad habit cycles, especially if you don't have a coach or mentor to help identify these issues and give you advice on exactly how to break these cycles. Now, tip number 3 is something that I personally struggled with a lot and pretty much wasted a year of time trying to perfect, and it's that indicators are mostly useless. So I want to start out by saying that if you apply indicators correctly and utilize them as a part of a larger statistical trading system, then they can be valuable. But most people approach indicators the wrong way and see them as some holy grail sign of a trade being 100% correct. This ties back into the last point. You don't need to win every trade in order to be a profitable trader. And this topic is something that I wasted over a year trying to perfect. I kept trying to find the magic mix of indicators that would surely guarantee me to have only winning trades. Obviously, this led to nowhere, and now I only use 1 or 2 indicators, but I don't really use them as pure entry and exit signals like I used to attempt. At the end of the day, almost all indicators are lagging indicators, meaning they use price data and volume in order to calculate themselves. So they end up usually showing their signal after price and volume have already given the same signal. With this in mind, it's no wonder why most successful traders utilize only price and volume when it comes to determining where they buy and sell. I go more in depth on this topic and show examples in my day trading guide, which you can watch on my YouTube channel. Now, this next tip stems directly from what I just said, and it's that you do not need to be right on every trade to be a profitable trader. So I cover this way more in depth in my video titled Risk to Reward Explained, but this is a concept that simply so many beginner traders have zero understanding of. Profitable trading at the end of the day is just a simple mathematical formula. You don't need to have a high win rate in order to be a profitable trader. In fact, you don't even need to have a win rate of over 50%. If you want to be profitable, win rate is only one variable in that profitability formula. Profitable trading is not only win rate, but it's your average win during winning trades and your average loss during losing trades as a factor as well. I made this profitability checker to help illustrate this idea. Assuming that we use $1,000 per trade, if we had a win rate of only 40%, but an average win of 15% and an average loss of 7%, we would end up with $1,800 profit after 100 trades. In fact, we could have a win rate as low as 33% and still maintain this profitability. Of course, this isn't the best return after 100 trades, but it is in fact still profitable and scalable. So don't focus so much on individual winners or losers. You need to learn how to systemize your trading and understand the underlying statistics in order to really gauge whether or not you are a profitable trader. Now guys, the last tip and probably the most important one is that it is not about how much you can profit, but how you will keep those profits. One of the most detrimental things that can happen to a new trader is to have instant success, because then they'll think they've quickly cracked the code on trading the market and will feel immediately immune. But as soon as they face a losing trade, they will have little to no understanding on how to manage the loss, and it can quickly balloon into and wipe out 40%, 50%, or even their entire account in one trade. Also, we've all heard stories of highly successful traders who don't manage the risk on one trade and it blows up their entire account and they get completely wiped out. It takes hundreds and thousands of trades to build up a trading career, but it only takes one to wipe it all away, and you have to be constantly aware and on defense mode for when you are in a losing position. A very strict rule that I have for myself is that I never want to risk more than 2% of my account on any single trade. And I go into more detail on this in my day trading guide video, so make sure to watch that, because most people will immediately assume, well, how am I supposed to grow my account by using only 2% per trade? That's impossible for a small account. But it's simply a matter of not knowing what risk means, so make sure to go watch that video. Alrighty, so those are the 5 things that I wish I had a solid understanding of when I first began trading, because if I knew those 5 things, I know that my trading P&L curve would have taken off a lot sooner, and I would have had saved so much valuable time in the beginning of my trading career. Let me know if these tips help you, or if you have any other trading tips that you can share with others. Feel free to drop them in the comments below. If you want my structured roadmap for beginner traders, sign up for it for free down in the description, and I'll catch you in the next video.